We hear the word insurance all the time, in ads, on bills, in bank emails. But what does it actually mean? Why do millions of people pay for something they hope they'll never, ever use? And how does this invisible system quietly move billions of dollars around the world every single day? Today, we're breaking down what insurance really is, why it exists, and how it actually works in 2025, explained simply, step by step. So, let's start with the basic idea. Insurance is actually one of the oldest concepts in human history. It's a way for a community to share risk. Imagine a village of 100 people. Each person puts just a small amount of money into a common fund. Now, if one person's house burns down, or they get into a serious accident, that fund is used to help them rebuild their life. Everyone contributes a little bit, so that no single person has to lose everything. That, in one sentence, is insurance. Many people paying for the few who unfortunately suffer a loss. So, why do we even need it? Because life is unpredictable. Accidents, illnesses, floods, fires, they don't send you a warning text first. Without insurance, a single unexpected tragedy could completely wipe out a family's savings overnight. Insurance takes that huge, terrifying uncertainty and transforms it into a series of small, predictable payments. You're basically trading one big, unknown risk for a lot of small, manageable premiums. This is why governments, huge corporations, and families all around the world rely on it. It's not just about protection. It's about creating financial stability in a chaotic world. Every insurance story really has three main characters. First, there's the policyholder. That's you, the person buying the protection. Second, there's the insurance company, the one collecting all the premiums and paying out the claims. And third, there's the risk pool. This is the massive group of everyone else who is insured under a similar plan. When you pay your premium, your money joins this giant pool. That collected money is then used to pay the claims of the few people in the group who actually face a loss. The whole system is powered by a combination of trust, mathematics, and probability. So, how does it all work, step by step? Here's the full cycle. It starts when you buy a policy, which is just a contract that promises you coverage for certain events. In return, you pay regular premiums, either monthly or yearly. The insurance company takes that money, uses a part of it to run its operations, and invests the rest to help it grow. When a disaster strikes, say a car accident, you file a claim. The company then verifies your claim to make sure it's valid, and once approved, pays you the amount specified in your policy. The secret ingredient that makes this all work is something called risk management. Insurers use massive databases, sophisticated AI models, and people called actuaries, who are experts at calculating the odds of pretty much everything, from car accidents to hurricanes. They use all this data to price every policy based on its specific probability of a claim. Let's keep it simple and talk about the most common types of insurance. For most people, there are four main types you'll encounter. First, health insurance, which pays for your hospital bills and doctor visits. Second, life insurance, which provides financial support for your family if you pass away. Third, auto insurance, which covers your vehicle and any liability if you're in an accident. And fourth, homeowners or renters insurance, which protects your property and your belongings. Beyond these, there are all kinds of special policies, like travel insurance, pet insurance, business insurance, and even cyber insurance to protect your digital data. Each one exists to cover a different kind of risk. Ultimately, insurance only works because of a balance of trust. People have to trust that others will keep paying into the system, and they have to trust that the company will keep its promise to pay out when needed. If everyone decided to stop paying their premiums after 1 year with no claims, the entire system would collapse. It's a shared social contract between millions of people, built on math and a sense of responsibility. This is why governments and regulators watch insurance companies so closely, to make sure that pool of money is real, safe, and ready when you need it most. Here in 2025, insurance is smarter and more connected than ever. AI systems can track your driving habits to offer discounts. Fitness devices can monitor your health for lower premiums, and digital claims can get approved in a matter of seconds. But this also means that companies know more about you than ever before. Technology is making policies cheaper for those who are considered safe and more expensive for those who are seen as risky. The core idea of sharing risk hasn't changed, but the tools we use to measure it certainly have. At the end of the day, insurance isn't really about being afraid of what could go wrong. It's about creating security, planning for the future, and giving yourself peace of mind. When you truly understand how it works, you realize it's not just another bill to pay. It is a partnership that helps protect your future. If this video helped you finally understand what insurance is all about, subscribe to our channel. We're here to turn complex financial topics into simple stories that everyone can understand. Thanks for watching.